Hello, my name is Kevin Hollifield, and today I will be talking about capital budgeting. I think capital budgeting is very important, especially in marketing. It's important because you need to ensure that there is a budget to work with and that budget is geared towards the pre-established growth incentives, usually brought on by the chief marketing officer. That's a very big part of that individual's job, and furthermore, to ensure that these incentives have the budget and to make sure that those dollars are going in the right place for the organization. A capital budget lists projects and investments that a company plans to undertake during the next period. That can be, it's typically annually, a 12-month calendar year. And capital budgeting is the process of analyzing projects and investment opportunities and deciding which ones to accept. Another big part of capital budgeting, just some factors to keep in mind, are the incremental earnings, and this is the amount by which a firm's earnings are expected to change as a result of an investment decision. So being able to actually see the results from the initiatives put forth. And then another important term is the straight line depreciation, and this is a method of depreciation in which an asset's cost is divided over its entire life, and that way you can essentially budget out for the investment and see how long that investment is going to work for you in order to measure the earnings on that investment. Applying this in a real-world environment as an entry-level professional, you definitely want to have a grasp on this process. So it'll be part of your work in the future, and a good way is to just talk to your boss, show an interest in this, and just ask questions and familiarize yourself as much as possible. As a mid-level professional, these individuals are typically responsible for creating the budget and forecasting earnings and expenses that will incur, and then present that to the executive level professionals. These individuals will oversee this process. They'll be the ones to have the final say and approve the budget. In addition, they will be the ones that have that leadership role and determine the initiatives for the period or the year that the budget will be based around in terms of growth. In regard to ethics, when it comes to capital budgeting, in my experience, I've seen an ethical situation arise with this process in the case of creating the budget for an investors. The company I worked for was owned by a private equity firm, so this investment company wanted to see a certain growth percentage. So at the time, the executive level professionals definitely made the forecast for growth, and those numbers looked better than what they actually were, to show these investors what they wanted to see, and these numbers were definitely not attainable. So I feel that falls into the category of ethics, and long term it's better to just be realistic with these numbers in order to figure out what's actually wrong and get back on the right track. Use the text provided for the course to determine the definitions for the ones I used in this presentation. Again, this is on capital budgeting, and thank you for listening.